What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and we've had a pretty decent couple of weeks with gold and silver and precious metals miners. So is this just a dead cat bounce and a good opportunity to maybe take some profits off the table or short it and ride it back down some more? Or have we really seen the bottom get put into precious metals and it is smooth sailing to the moon from here? Ready? Let's dive in. Gold closed out the week at about 1776 after having a couple of very decent weeks here. For over a year, the $1,700 mark on gold has acted as extremely strong support and resistance. And that is still true as of the last couple of weeks as it tested to try and fall below that number right as sentiment was becoming extremely bearish, turning around. It looks like we finally put in a bottom. We've had higher lows since then, the bottom in early March, and we are rapidly approaching the next key level for gold, which is $1,800 per ounce. Now, one of the key tailwinds that I've been talking about for months now regarding gold is real yields. Because as inflation expectations have been increasing, which they have increasingly, interest rates have followed suit, which makes sense. If you are going to loan $100, you want to make sure when you get that $100 back, you can still buy $100 worth of stuff. So if you give $100 as a loan, get $101 back, you want to make sure that the cost of everything else didn't also go up by that same amount. Otherwise, you didn't make any money. And you really don't want the cost of everything else to go up more than the interest rate that you're charging on your debt, because then you're losing money. And so if that is the case, if interest rates, the real interest rate is negative, and the real interest rate is when you look at inflation and the interest rate combined, you have to adjust the nominal interest rate by inflation. So if the real interest rate is negative, that is a huge benefit for gold, because if you're holding dollars, you're losing money. If you're holding gold, at least you're not losing money. Now, when interest rates go positive, real interest rates go positive, that is a negative for gold. Because if you hold paper currency, you're gaining in purchasing power. Maybe just a little bit at a time, but you're still gaining in purchasing power. So that takes away, from a trader's perspective and a lot of institutions' perspectives, it takes away some of the attraction to gold. Makes sense. But interest rates can't get too high because the economy is so over-leveraged with corporations and governments. They can't afford to roll over their old debt if interest rates get too high. So the Federal Reserve has been stepping in over the last couple of weeks, buying extra bonds to make sure that the interest rates don't get too high. Inflation rates aren't changing, which means that interest rates are moving back down again. This is a fantastic tailwind. I don't know if this will continue, but this is one of the key things to watch with precious metals, real interest rates. Another thing, though, is international buying. One thing to remember is China is a huge player in gold. Not just the PBOC and government buying of gold, but the people in China as well. People in China, people in India, all across the world, they buy gold in order to store their wealth in something that has something with a good store of value. We have to remember that the West, people in the West, are a tiny fraction of the entire world, and our financial habits do not directly correspond with the majority of the world and throughout the majority of history. And in 2000, China started to allow its people to buy gold again, and that started one of the biggest bull markets in gold, as it was only trading around $300 an ounce at that time. And then, for the next 11 years, it went up, started its nice little bubble phase, got up to about 1900. Well, China has done it again, and they just gave permission to their domestic and international banks to start importing large amounts of gold again. And especially as China's economy recovers from 2020 and COVID and the pandemic and all of that, there's a lot of money pent up in China wanting to buy gold. So this is another fantastic tailwind here. And it's not just gold. We've seen demand for silver spike across the industry over the last couple of months, especially as a kind of like a meme trade. Same thing that happened to GameStop. People are trying to take down the big banks, cause a short squeeze with silver. I've always said I think that's pretty difficult with silver because it's a lot easier to squeeze gold. Percentage-wise, it takes a lot more money, but percentage-wise, it's easier to squeeze gold and cause like a run on the bank, a paper squeeze for gold than it is for silver. But regardless, there's been a massive increase in demand for silver, and that has caused the LBMA to release a report recently that they actually admitted to being at risk of running out of silver themselves. So likewise with gold and silver seemingly putting in bottoms and showing really fantastic strength over the last couple of weeks, we've also seen precious precious metals miners start to take off. Many miners have been valued using a much lower price for gold than the market is currently setting, because historically, precious metals miners have been cash burning machines, loaded up with debt, and they just destroyed capital. And so over the last 5 to 10 years, the entire industry has really had to clean up their books. They've deleveraged, they've turned into cash printers, and not the Federal Reserve kind. And many precious metals miners are just money-making machines. And again, they're valued with assumptions that gold could be $1,600, $1,500. Some of them are even, $1,200 gold would not impact their profitability right now. So precious metals miners look absolutely fantastic right now. We've seen a breakout. We would still, for something like GDX, want to see it break above and sustain above its 200-day moving average. But again, long-term, all very good signs happening right now. And if we do have any more dips, in my opinion, these are opportunities, fantastic opportunities to load up even more. Now, one of my favorite ways to buy gold and silver is to use OneGold. They're extremely secure, very easy to use, very cheap. You can store your gold or silver in allocated, segregated accounts in other countries, and you can do auto investing with as little as $5 per day to take advantage of the price movements up and down. If you sign up with my link in the description below, you'll get a $5 sign-up bonus. And if you'd like to invest in gold or silver in your retirement account with your retirement account money, open a self-directed IRA with a company like iTrustCapital. Again, very easy to use, very simple, very cost effective. And if you use my link, you'll get your first month free. As always, I really appreciate you guys. Thanks so much for watching. Have a good day.